And like I said, we are going into boot camp. I don't know how many of you that are trading. We're going to live trading now. I've done some of the rough work, like as I said. Let me bring them up on my just give me some time, let me bring them up. Is my page closed or what? Okay, I'm on the wrong page. Let me. Okay. So as our custom is, most likely everyone is this, we consider analyzing the oil market. Can you see my screen now? Can someone see my screen?
No, we can't.
Yeah, first of all, how you guys doing? Let me know the people I know their name here. Ejima Emmanuel, who else I know? Flimsy, yeah, Flimsy. Promise. So how you guys doing? I'm trying to share the screen. So while this loading, let me ask this question.
We are doing fine, sir. It's been profitable so far.
Oh, fine. But I think my system is glitching. That may be the reason. Even if it didn't come off, we'll see do something. Don't bother yourself. It's glitching. Yeah, I could see it's making a noise. I hope you guys can hear me now.
Yeah, we can hear you perfectly.
I hear you, sir.
Okay.
Yeah, your screen is on.
Yeah, my screen is our policy that we must keep camera on unless if I'm not in a comfortable place. It's part of our fraud prevention, so that to make sure you are dealing with the right person. That's also why when we call you on Zoom or whatever, we like to see your face at least for the first time, for first 5 minutes, to be sure we're not dealing with an imposter. Although these days people buy this thing, I don't know the name. Someone can buy fake faces now and use it to be on Zoom with you. I've seen it where there's one cryptocurrency that ended up somewhere. They were saying that the owner of the crypto was the owner of Amazon, and the man was coming on the Zoom. It was coming on the Zoom. Even my person promoting it could not believe that it was a clone. I told him that man is not the real owner. They said, no, the man is on the Zoom. Look at his face. So it was him that was talking, like the owner of Amazon that was talking on Zoom, talking about the project and everything. A lot of people bought the coin. Then everything becomes story. They were using his face and he was coming on the Zoom to speak, but it was not the right person. Yeah. So basically, the API inventory report came out last night. It was about minus 2.something million barrel. So EIA is expecting like a deficit of minus 2.0 million, minus 2.0 million barrel currently now. And the current price of oil is at 63, according to how we analyzed it last week. We will say it's gonna get to 62 or 63. Brent crude is hitting 66 according to our analysis. But remember, we are supporting going more bullish this time around because of oversupply in oil, or potential oversupply in oil and the decrease in demand. But before then, I've already asked ChatGPT to give me kind of a breakdown of what oil is going to look like. I just want to share it with you guys as soon as possible. I also asked him for gold. So these are the breakdown he gave to me as soon as possible. So please just take note about it as fast as possible. Please take note. I hope you can hear me. Once you can hear me, just find a way to indicate.
Sorry, sir. Is it possible our sell position? Are we still holding it?
We're not talking about live trading. Yeah, you shouldn't close any trade. We're just making analysis. After analysis, we can decide whether to close or not. But if we don't really encourage closing of trade, unless if you're making profit. If you're on profit, you can close it.
Okay.
Yeah, we don't encourage closing position anyhow. No, because patient is a strategy that is not found in the market. It's found in us. Once you're patient in the market, you're definitely going to make profit. Yeah, but let's just do analysis. Then we can decide whether we should close it or we should leave it. Like so, so these are the factors available on oil. The major reason oil price is rising is because of US-China trade development. You know, recently, that was last week, there's an agreement between the US and China to reduce tariff, and it has boosted the market optimism, leading to a rise in oil price. Do you understand? Then there's another potential reason here, which is OPEC production strategy, OPEC Plus, led by Saudi Arabia. It has also shifted its strategy. Saudi Arabia has shifted its strategy including other OPEC Plus community by increasing oil production despite previous maintaining cut to support prices. So this move has also reflected in growing frustration with non-compliance by one members and amid to balance economic realities. Then the EIA, which is the major body that regulates the supply and demand and other oil activities, that's people that have published information globally. They have also projected that there's an increasing global oil production with that will outpace demand growth, so leading to gradual decline in price over the forecast period. Now there are other things that that you also need to pay attention to. I asked him, do you mean that OPEC Plus increased production? So I wanted to be specific. He said yes. That's correct. OPEC Plus has signaled a shift towards increasing oil production, at least phasing out some of the voluntary supply cuts that had been in place. Do you understand now? So I think we have done similar things several times, but we just have to make sure we keep analyzing it to become a master in it. That's different between a first degree and a master's degree. Do the same thing on a much advanced level, which you have done on the first degree. So it become part of you. You can easily understand it. So previously there's the OPEC Plus, which is led by Saudi Arabia and Russia. They have been limiting oil supply with coordinated production cuts to supply global oil price to rise. Now they are facing internal disagreement and pressure from some members to boost revenue. The OPEC Plus is also now moving away from those aggressive cuts, signaling a gradual increase in output, a gradual increase. So what I'm saying potentially is that there's the potentiality of having more supply of oil this time. So the challenge is happening. Global demand is slowing recovery. Some OPEC members plus are frustrated with others not sticking to quota. I mean, what they agreed. This is a desire to regain market share, especially with non-OPEC producers like United States or blah blah blah. So now, so I also talk about whether they can give me economics of gold, but let's keep that one aside because we just have only 20 minutes, only 10 minutes. So now, what we're saying generally is that one factor is what is pushing the price up. There are other major factors that is an impending factor that has potentiality of pushing the price down, which is demand and supply, the most critical factor we use in trading. Now, there is a potentiality of more supply on OPEC till the next quarter. If I go further, you could have seen where I disclosed it about where they mention it the next quarter. So now the supply cut, the supply surge coming in is not even happening, and they're even going to supply more. They're going to supply more. So going that on the chart, that is the reason I said, based on what is happening, there's no strong demand in the market, where there are more chances of more supply. So there's potentiality that the price may be more of bearish than bullish throughout this year. That's what most of people are analyzing. That's what the reason why I told you we'll be considering more of selling position than buying position. So do you understand? So because of that, the price went up because of the OPEC, the US and the Russian, the US and China agreement. Of course, all of us cash out. I closed our own trade, I think on Tuesday, I closed it on Monday. Because we bought here, we bought at a very low price here, and we gain about 400 pips, then we close all of them. Then because we are expecting that this area of this particular point is a short time support. If the market, if the price break this support, fine, it may go to 69 or 68 within this area, because this is the previous. Sorry, this is resistant. Don't get me wrong, please. This is resistant. If the market break this resistant, it may go to 69 or 68 around here. So which is also here is also the previous resistant. So despite that, me personally, even in our company, my traders group, we agreed that we'll be taking more of selling position in oil. What we mean by that? Any little rising in oil, we'll find a way to sell. Even at that, generally, oil can easily fall than to rise. It takes a lot for you to rise, and it takes nothing for you to fall. Anything, the market will fall, because psychologically, the people who trade on exchange, they only buy, they don't sell, and they're the one responsible in pushing the price up or down. It's not we that trade on CFD. Do you understand? So since most investors don't want to invest on it, it means the price will not rise. So people that are invested will be scared of losing. They'll be selling more. However, we still maintain our position of buying at a low price, which is around 59. 58, 57. See, within this area is considerably a low price of oil. See this area. So it is still our stand in making sure we buy in there. Now, what are we going to expect now? Please take note. Anytime I mention, take note. Just note that I'm saying something important. In the next 6 minutes, if the report become negative, like there are lesser supply, the price may shoot more up. So we can buy, but on a short level. So we can buy on a short level. What I mean by short level is that don't expect oil to keep rising the way it rose last year. Based on what is on ground, it can fall at any time. So we can buy now and expect to leave as soon as possible between maybe 67 or here 68. I mean, within this area, if this point is potentially going to break, this is resistant. So we could buy them. When we buy, we put SL very closer, because market can easily fall. It can easily fall. It has potentiality of falling. The reason why it's going up is just because of China and the US. And there's also an important factor we saw here. We posted now. I've not probably gotten a research information from our research team to give us, because we have a research people who have paid to do research for us. So they're the one, this is their job. That's what they study in school. So they don't have to do research. So there's this in the Goldman Sachs and Trump want oil price in the 40 to 50 range. I don't know how possible this will be, but if it could go more into it, we may discover if there's any fact we have to consider. So there are potentiality of bearish sentiment coming up in the market. That is the reason why you have to be careful continuously buying. There's no hope that the price of oil will be good this year, because the market, the economic of the world is full of uncertainty because of the Trump policy. Let me know if there's any question.
Yeah. So, when that aspect where you said that the price might get to 67, 68, that means the sell position we will have to adjust it a little bit.
You don't have to adjust it. You don't have to adjust sell position. What you have to do is to keep it open, because after rising it will drop. That's why we're talking about risk. The little sell we had in our own is not even a proper official. It's just a minor position on sell to see what the market will be before we enter the full position. So I use the lowest volume to place that trade. which is around 63. Just here, it's almost here too. No, this is okay. This is Brent. Sorry, WTI. I put it on WTI. Yeah, it's almost the same 63. It has gone only 100 pips away. So nothing. It's just within the same range. I don't know the risk you use in placing your own boat. If you have a sell position, you should not even close sell position. Rather, be considered more closer buy position in oil than sell position. Oil can crash at any time. It has chance of crashing more. Based on the factors we have on ground, it has potentiality of falling than rising. Do you understand what I said now?
Yes, when you say open it, but there's no possibility of opening it now. It's so because I bought a brand at 55.
You bought 55.
65.
Brent crude
And
65. Yeah.
yes.
You bought at 65. Sell or buy?
No, sell.
So you saw that 65, which is here. Around, is this 65 point what? Just here, right?
Yeah, 65.55 or so.
Yeah, possibly around here. Then the market is it's just 44 pips. So it's still within the same range. We consider loss if the market has gone beyond our risk. That's when we consider our own loss. But if it's 1%, 2%, no deficit, it's just like within your KB or whatever. So what we used to do, that's the first entry. That's what is called second entry in the market. First entry must not gain. We have entry 1, entry 2, entry 3, and entry 4. It is when you exhaust all your entry that you can consider your strategy void. So now, if this market move up to this point, we have 3 minutes to the time. If this market moves up, let me use green light. If this market move up, like to this point, like break this point, it has capacity of dropping. So we can have what is called second entry within this point, 68. Second entry, because based on the price action movement, if you check the price action movement, it has risen significantly from here to here. That is 744 pips. And we trade on average 1,000 pip different. 1,000 pip up, 1,000 pip down. So we can also consider it significantly high based on the current price where it started rising. I'm not saying it cannot continue like that, but based on price action, that's 766 pips up. Do you understand? So if you have a sell position, leave it. We'll look for another entry because market can use 1 week to rise and use 1 day to fall. You can use 1 month to rise and use 2 days to fall. All the whole rising, it has been rising for like the whole 1 month. You can use only 2 days to crash. So that's one thing about oil. It's easier to fall than to rise. Get your system ready. We have about 2 minutes to the time. It's technically about 40. Sorry,
please can you help me get in touch with Danny? I'm waiting for him to send me because I'm depositing money on CFD and it's not responding.
It can be difficult for now because of I'm not with them now, and I can't just off my phone and start calling them. So I can't just off my mic now and start calling. You know what I mean? But it's just a 1 hour whatever. Then we could be able to also communicate further. What you have to do, just focus here. Let's just finish. Don't capture everything. Just focus now. Let's just finish whatever thing we're analyzing. One analysis can take effect in the market more than a week. Then you can still make profit from it. You know what I mean?
Yes, sir. Thank you, sir.
Yeah. So the report is coming out now. So let's see what's going to be the outcome. With there's increase. It means the market will potentially drop. There's a surge of 4.4 million barrel. Good for us. Then so that means now if you're holding your sell position, Mr. Who's talking to me? Is it Mr. Emmanuel?
Emmanuel, yeah.
So don't close your sell because there's a surge. So these days, anything increase will cause some pandemic. So don't close your sell. You can hold it up. Put your SL according to your risk. I support SL to be around. This is 66, maybe 67, around 69. SL. Let me put it on. Let me put it on red. Anything I mark on red, that I'm marking like SL or sell. We have discussed about that before. Any question? So there's an increase. There's a surge. A surge. It increased by 4.4 4 million barrels from the previous week. So there are more than what was supplied last week of -2. So, and as you can see, it's now on red, which is worse than what they expected, because they were expecting a surge. So there's now kind of a deficit of 2 point. No. What's happening? This is 3.5 million. It's like they're making a mistake, because what AI is showing is 4 million. Are you seeing what I'm seeing? This is by giving us 3.5. Well, this is by telling us 4 million. This is the first time it's happening. Are you guys noticing what I'm noticing?
Yes.
Why is one person talking to me? It's like everybody's at work.
This thing, what packing?
We are following. We are following.
Okay. So this is my first time of noticing the AIA, the major board, they gave us 4 million. Let me refresh it again. What that's like, you know what I mean?
It's better we follow. It's better we follow AI report.
No,
Sorry?
It's better we
is this
follow
or not
AI report.
yesterday report?
No, this is today's report. It can't be yesterday. So it's showing 4 million. The major company, look at the URL, eia.gov. So it's coming from them direct. Why the people who give us the timing, which is for the forecaster, which is the forest factory, we use them to get the appropriate time, is reporting 3.5.
But
It's still there. It's still 3.5.
You cannot trust forest factory. You can always trust them. Let's trust the actual reports from the EIA.
So now when there's a surge, I told you guys in my oil and gas class, anytime I keep seeing surge, supply every week, be careful, keep buying. One day to crash. And if you're seeing a surge these days that there are more supply consign, there shouldn't be even anything like this, although it goes in line. One that's a supply surge, you'll be seeing it. If you see a supply report on the news that the OPEC is producing more, definitely you'll be seeing more supply report than lesser supply. Automatically, if you see on the news that OPEC is cutting production, definitely every week you'll be seeing minus here, because they are cutting production. So what I'm saying, take note so that you won't be carried away by watching me. Based on that, now we may most likely consider holding our sell position and go back to work. Come back after 1 week and see how far we'll gain. Those that trade for a short time period, this is 4 hours chart. You could see how significantly the price surged from this point to this point. From this point, it surged to this point. Now remember one thing, we use law to trade. We don't use emotion. Those rules is what we use. So we use supply and demand to trade and follow those laws about supply and demand. Then we use high price and low price. Even if you buy it, even if you sell it and it go up, it does not mean that we are wrong. What the purpose which we use is what we use to judge our analysis or not. Do you understand? So do you have a question?
So we can make a second entry.
Yeah. You can make a second entry, but make sure you have a good amount of capital. So basically now, what are we expecting to drop? We should expect it. Let me go on 1 day so that we know how much returns we're going to make. I told you to treat your trading as an investment. Don't just use the concept of being a trader, be an investor. Let's expect a drop to this point. 60, let me check a drop. Check a drop from this point. Oh yeah, let's expect 300 pips. So 300 pips will give us, let me check how much it will give us on return on investment. If you say 300 pips, of course, those of you using $1 to trade, so 300 pips will give you $1. Let me put it in dollar sign. $1 times 300. Of course, you already know the distance. We give you $300 profit. So if you use the same capacity on the Brent, both Brent and WTI, so you're gonna have $600 profit if everything works. $600 profit. So that should be the unexpected return. Unexpected return. You have to be specific if you want to be a profitable trader.
We that enter the market at 62, and we'll just keep the one. We're not going to close the initial
that's
one.
their first entry. Second entry at a higher price we first gain before first entry at a lower price. Like for example, if you place a sell here and the price drop back to 62, you get more. As you can see, it's gradually dropping small. You will get faster. That first one you first gain before second one. Let me try to place a trade. Sorry. Yeah, I can place a trade now. It's me talking to you. I've not even placed before. Let me place now. I'm just sorry I cannot share the screen with you because the account is big. I'm placing trade at 63.28. Let me. My SL is 250. 250 pips. Yeah, just above that short resistance. If you want to follow me, fine, but it's not under obligation to follow me. Yeah. I'm selling, but you need to know why we are selling. Flimsy, you shouldn't even ask that question because you've been in this class for more than almost 3 months. You should know the strategy we use by now. In fact, you should even be teaching others. Okay, so go back to our analysis, continue, since we have done that one. If you have a question, you can bring it in. So also analyze on gold.
What about gold?
Yeah, that's what I'm back to gold now. I have to give you some things before we go on gold. There's something I asked them for gold. I said, can you give me a current demand matrix on gold? Before then, there's something he told me concerning gold. You guys need to understand it properly. Yeah, we are selling because the supply we're expecting, we're expecting a shortage of supply. Flimsy. We didn't know that. Why AI is reported 4 million and the price is already a bit higher. It's a bit, even it's on the point where we analyzed last week, we're gonna sell. We say we will sell around, we will leave our buy around 62, 63. Am I right? So that's where the market is. And based on the report on China and the US, talking about, they have eased the trade tension. That's the major reason why the price is going up. Now, there's also a dependent supply problem is already in the market. At the same price now, I was expecting maybe a shortage from the forecast on oil, and they were expecting a shortage of -2, but plus 4 million was not added. So because of that, I wouldn't want to go contrary to my strategy. My strategy is demand and supply, buy low and sell high. That's the only strategy I use in trading oil. I don't use emotion or whatever. I buy low and sell high, or I use demand and supply. I've been using that for like 8 years. I don't want to learn any other thing. So that's the reason why I said, okay, let me follow the supply report, which is short, more supply. I'm sure some people may be lost. That's why if you're not a trader and you pay for bootcamp, you'll be lost because bootcamp is for traders. I will encourage you to pay us for training so that we can properly have a one-on-one class with you and teach you how these things works. For those of you that have paid us for training, if you want to place a trade, you can indicate, we can assist you on it as well, because by education, we can be able to assist. It's not that we are giving you an investment advice, but through education, we can assist you. On gold, I get some report on gold. This is the gold outlook, approximately 3,246 per ounce. These are the major factors. The same thing, the reason why gold price came down is because of the easing tension between the US and China have reduced safe haven demand for gold. So leading to a decline in price. That's the only major reason. Similar thing that happened on oil. So these two asset class goes opposite way. Now, so another reason is inflation data and technical report, but the major reason is this one. The major one is this one I told you. Now I now ask him again. I now ask him. I asked him, can you give me a current demand matrix, the current one? Because they were telling me whatever happened in February. It was telling me about February report on Goldman Sachs, 3,200. That's where I was seeing it. I said, no, give me the current one. So look at what it gave me. It gave me this report. It said, as of May, this is 2025, global demand remains robust, driven by a combination of geopolitical tension, economic uncertainty, and strategic investment by central banks and retail investors, you and I. Here are details breakdown of gold. So he said that the current demand in first quarter, which is the one from January to March, we just ended, total global demand is 1.26 metric tons, making a 1% year-over-year increase, and the strongest first quarter, and the strongest, which is the last, we are in the second quarter now, which will end on June. And this demand will continue since first quarter since 2016. The report came from WSJ. You should know this company. They're also a news company. Then another thing is investment demand. Many investors are demanding, like people that trade on the exchange traded fund. They have also experienced a significant resurgence within inflow, totaling 22.5 tons in first quarter. That is also the highest in 3 years. It's the highest in 3 years. This represents 1,114% quarter over quarter increase. Now, bars and coin, there's also a demand on it. That one has rose to 325 tons. That's a 3% year-over-year increase, driven by strong retail investment in China, which posted its second highest quarter on record. So look at where the report came from. Of course, the central bank purchase, I've said about it before. Now, there's also a supply dynamic. Total supply also increased a bit because once more people want them, so miners are seriously mining back to back. And then now, they now give me a price outlook. Okay, this was the former price outlook. They were telling me about 3,100. But now, I now go directly. I say, please, Goldman Sachs forecast was by 2020, by this year. Is there any recent forecast this month? Because the previous one was talking about February this year. They say, yes, Goldman Sachs has updated its gold price forecast as of April 2025, which is last month. Now, they are announced forecasting the Goldman Sachs increase its year-end 2025 gold price, focusing at 3,700 per ounce. I know current price now is 3,200 something. We'll check the current price of gold. Let me check it now. The current price of gold is okay, 3,181. That means it has dropped. It has dropped more. Good for buyers. So my system is loading again. Oh no, I was on the wrong one. Okay, so they forecasted it will get to 3,700 per ounce, and they also projected a trading range. Please take note of this in trading range. Range. When they tell you something will get to some point, there will be a range. A range. So the bank anticipate gold price to fluctuate between, this is the range. Please take note of this, in 3,600 to 3,950 per ounce by the end, towards the end of this year. So potential upside scenario is in the US. In case of the recession that they want, in case the recession continue, the price could surge to 3,800 per ounce due to acceleration in flow on demand. Then it also told me another extreme scenario that is under high-risk conditions, such as intensified geopolitical tension or significant economic downturn. The bank posits that gold could reach 4,500 per ounce. When I was in London, somebody told me this in face-to-face. It's not on news. I think somebody from, is it Goldman Sachs or JP Morgan that told me this thing? Yeah, one of the research analysts. He said it clearly. This one. I think I've told you guys before that it may go to that point. Somebody even said that it may go to 5,000 if they're not careful. So now, so the same thing we are talking about also maintain that there's also significant demand on gold. Central bank, they are buying it and stuff like that. So the price of gold, based on what we have now, the bigger analysts are still expecting more such. And the reason why it came down was because the trade tension has eased. So people who move money to gold to save their investment has started returning it. So as you know, we are not selling gold. Fine, but I will not subscribe or sell continuously to sell. At this for me, I didn't sell. I bought here before. Now it has come down. There's no problem. I don't have a position on gold again, but we're expecting to buy gold more at 3,100. Or if you fall further, we'll buy at 3,000 because the further it's for, the more better for investors that want to buy. Do you understand? So this thing now poses strong potential for rising gold in the future if we follow the professional analysts who are already expecting some surge. Remember, the trade tension that was easy was just for 90 days. Maybe by month of May or ending of June, the market will significantly go up. So if the price move up from here, this platform doesn't give me exactly what I want, but I will try as much as possible because I trade gold through exchange, so the price is different from this price. This is 6.7%, 6.18%, which is 196 pips. But this 196 pips means 1,980 pips because of the decimal point here. Because the price is 3384.64. It's about how many? About 6 decimal point. So it's a very high value in terms of price entrance point. So this 206 points is 2006. So if you are holding a contract, let's say you have $10,000 and you're holding a contract of $10. Let me put it again. Let's say you hold a contract of $10. $10, $10 then times 2,000. What will it be? I'm not sure. I'm not good at mathematics, so let me check it with my calculator. If anybody can help me as well. I'm sure I'm not speaking to myself. 10,000.
I guess
10,
if you calculate it with a dollar sign, you'll be able to get it from.
Oh yeah, so to give me, I'm very bad. I'm very bad with mathematics. It will give me $20,000 profit on $10 contract. So if you're using $20 contract, you know what I mean? $20 contract, which is volume, times 2,000. So we make about, let me put a post. We make about $40,000 profit.
With how much investment?
Based on if it's a medium risk, $10,000 or $15,000 can go on $10 contract under medium risk, but if it can go on under high risk. It can go on it under high risk. I'm telling you what is happening now. So at this point, it's good for gold. Okay. I will tell you another one. Then if we are using $50 contract, that would be this more amount of money times 5. Obviously, a lot of cash out. A lot of cash out. 50 times 2,000. Oh, that was $100,000. Yeah, I was correct. $50, which is maybe 5 lots, so that you guys won't get me wrong. 5 lots. But what I used to do like that, we say when I presenting investment to investors, they don't understand lot. They only understand volume, like the value of it in dollar. If you are telling them lot, they don't understand what I'm talking about. That's why I use the standard terms for them. But you guys now know what is called lot. Yeah, which is 5 lot. It will give us $100,000 profit. Trading is mathematical. So if you calculate it, that's how you're gonna get it. Unless if you're using a stupid broker that will cheat on you and give you a different profit. But this is exactly what you're gonna get. Yeah. So on the risk part, on the risk, let's say we are risking, let's say you are risking maybe 30% or 10%. If you're risking 10% from $10,000, that means that would be maybe $1,000 you're gonna risk. That risk means assuming it didn't work, let risk only 10%. If you risk like 5%, that would be $500, which is not really bad, but the risk return means reward. The lesser the risk, the lesser the reward. Then if you are risking maybe 20% of $20,000, that would be like maybe $4,000, and you are most likely going to hit about $40,000 profit to risk 20,000 to risk 20%. So this is a very easy analysis. So assume you are an investor now, you can invest based on that matrix and expect the surge. And once it happens, everybody will be laughing. Yeah. So let me know. Then somebody asked for buying. Because of that, we are also on the strong side of buying more on gold, both on gold spot and on gold futures and on gold CFD. So here it presents another potential entry for buy. You see this point now, or present another potential entry, but I'm concerned about one technical law. It's breaking out here. Here is a breakout. I'm a bit concerned. But they can buy here first entry, but I'm not sure it's going to get to this support. It may form a support here, or it may even form a support at 1.1. Goldman Sachs is okay. No, they're not focusing on support. Nobody's focusing on support now apart from me. So here may form a support. Who asked me that question? Is it a promise? So here may form a support. Yeah. It has broken the support, so here may form a support. It's also a good one to buy, but you know that gold is very volatile. You can put a stop loss maybe around 3.7, but I'm not sure you're gonna plug to 2,000. I'm not sure. Sorry, I mean below 3,000. I'm not sure because there is a very big demand for it for gold, and there's also a lot of tensions. So you could buy now, or if you are selling gold, make sure you put stop loss here, like within this area, because it can surge, it can go up. This market I'm saying can go up. You just woke up one day, see that it has gone up. There are demand on gold. The demand have not left the market. You can only consider selling gold if demand has left. There's no strong indication that demand has left. So now that it's down, it's good for a buyer. Remember what I told you guys in the past, that if you're a buyer, remain a buyer. If you're a seller, remain a seller. Don't buy and sell. But based on what we are seeing here, sellers are not doing well in gold this year. Buyers are going to do more than sellers. Any question?
So when are we going to be targeting the price that Donald Trump is suggesting for oil, which is within the range of $40 to $50 a barrel?
It can happen at any time. That's why we are careful of selling oil. As you can see, sorry, we are careful of buying oil. That's just the reason. It can happen even now. But
can we sell at this price and hold it to that $40 a barrel? Serious cash out.
Yeah. You can, but you know that it can't just fall directly like that. It can take a couple of days or months. So even inside that for dropping, you also be seeing some buying trend. That will go like a couple of pips before it fall down again. Yeah, but there's one thing about politicians. They control the price of oil. They may decide to push the price at a particular level. They leave it there. They will try everything possible to push it there. So people on the exchange can vote to put the price down, because gold oil price is decided from the New York Stock Exchange and the ICE. They are the one that decided the oil price. Then gold price is decided by the London Bullion Gold Exchange. They are the one that decide the price gold should buy and the price gold should sell. So, and the politicians controls all of them. They can call them, say, please, I want you to crash this price. They can set it at any price they want. It's all about voting to go up or voting to come down. Then once the price crashes, even though there are more demand and supply, it will not really impact it strongly, because the price has already crashed seriously, because I don't want to control it more. But now, let's check the current news if there's something that's countering our analysis. But anytime there's a report like this, so EIA confirmed supply oil inventory. OPEC Plus production fell in April, despite pledge to start hiking output. Okay, there are two breaking news that came out here. Crude oil inventory in the United States saw an increase of 4 million. That means Forest Factory was wrong today. This have also confirmed from EIA. Increase of 4 million, but during the past week ending May, according to data from EIA. So, guys, let's follow the news and trade. Don't follow our feelings. Do you understand? So let's read the news. As you can see, there are a lot of bearish sentiment coming up in the market. So let's follow the news. If people are quiet, I don't know whether you guys are following, unlike before.
Yeah, so you said we should maintain the sell.
Yeah, maintain the sell. I have to sell position now. I have to sell on oil. By God grace, I will cash out. I will cash out. Like I told you, I have to tell you the truth because you paid for it. We are not considering buying more of oil. I can tell you the truth. So we try to make sure anytime we see a good rising in oil, it's a great opportunity for us to sell. We are taking more of sell position in oil. Even before when oil price is good and bullish, it can easily fall. That's about oil. Oil doesn't take time to fall. Oil can rise like 2 months. If you complain that my position never again, within a week or 5 days, the whole gain of 2 months will crash. That's how oil fall. Do you understand? It falls faster than rising. It can be rising like 2 weeks and use 1 day to fall down all the rising it's been rising. So all countries, OPEC combination. Okay, this may be a very challenging news. OPEC production fell in April despite pledge to start. All the countries in the OPEC Plus but saw their combined crude oil production drop. Okay, per day in April compared to March, despite the pledge to OPEC producers who are withholding supply. Okay, OPEC producers wait a minute. If you go, okay, fine. Saudi Arabia top producer and leaders of OPEC raised the production by 49,000 barrels per day compared to March and pumped 9 million barrels in April, according to OPEC's. Elsewhere among OPEC producers declined in the sense, declined in the sanction Iran and Venezuela as well as Nigeria, where frequently face force majeure circumstances of said Saudi. Okay. So any question?
Yes, I have a question. Good afternoon, everyone.
Okay.
Yeah, I wanted to place a trade, but under my quotes, I'm not seeing anything like oil. I'm just seeing Euro USD, GPB USD, USD CHF. So I don't know how to.
Go under that quote, look around at the top, you will see something like cross.
Like
That's a
cross.
sign. So if you click on it, you will see add quote or add something like add pairs. Then you can now, if you look around it, you will see of course you can search for oil.
Okay, is it US oil?
Yeah, it could be US oil, depending on the broker. It could be US oil, it could be Brent, but they're similar anyway.
Okay, but I'm seeing US oil. I'm
Yeah,
seeing
yeah.
UK oil.
UK oil is Brent. US oil should give you the price of 63.24 or around 63 point something. That should be how to know.
Yeah,
Brent oil should give you around 66.
Okay. Okay, then for the gold, it's showing me as Australian USD.
Yeah. It's called X something SAD. Who can correct me, please? On CFD chart, most of them put it XAD gold. SAD USD.
Is XAU USD.
Yeah,
okay,
SAU
so
USD.
it's correct.
Yeah,
okay.
yeah.
Okay. So for the
on my
gold
own,
now, okay.
Go ahead.
I wanted to ask for the gold, should I buy now or I should sell? Same thing with oil. Should I buy or sell?
Well, you can only hold one position. I know you. You are learning. You can only hold one
Okay.
position. Yeah.
Okay.
Gold is volatile. You shouldn't buy gold.
Okay.
It requires some margin.
Okay.
Even if you want to buy gold, it's good we found a sniper entry. Although here it looks like sniper entry anyway, or we find a support. Let me check it on 4 hours. Yeah, it looks like sniper entry. Sniper entry was one of the points that if you enter it, you have chance of going off without falling. This is 1 week. Okay, let me check it on. Let me check oil. So oil, yeah, you could use maybe, I don't know the volume your broker is giving you. I will consider you to test run it on FX first.
On FX.
Yeah, I want to know the volume, the value your broker is giving you, because it determines how you place the trade. Talk to us or immediately, because the analysis is still valid. We could help you if you could talk to us privately. Yeah, I want to know the value. What I mean by value, if you use 0.01, whether it's gonna give you 10, whether it's gonna give you 10 cents or 1 cent.
Okay, but I think what's showing here is 0.51.
No, don't use
Okay.
it. Change it to 0.01. If you put 0.01 and place a sell, you put a target profit of maybe 250, that would be $25, which is 2.5%. That's stop loss. Then you can keep your take profit empty. And it's fine. 2.5% is fine. Per trade. Even if you put it 300 pips, that is 3%, which is $30, then it's fine. Well, most brokers give you, most of them give you 10 cents per movement. Yeah, it's fine.
So I should buy?
No, oil, we are selling oil, we're not buying oil. Don't buy gold now, but we are buying gold.
Okay.
Yeah,
I
we
should
are
sell.
buying gold anytime soon.
Okay, I should sell oil.
Yeah. We are selling.
Then
Follow sell.
Okay, then I'll put the stop loss at 250.
What I mean by 250 pips, do you know about pip calculation? What I mean by 250 pips, everybody look around here is okay, let me give you like this. From here, 65.38 is 200 pips. So now if you add a 50 here, around here, yeah, 65 point maybe 88 will be 250 pips on price. Because of 64.38 is 100 pips. 65.38 is 200 pips. 65.89 will give you that 250 pips. Yeah, which is approximately 2.5% of like 2.5% risk measure. Yeah.
Okay. That's for the stop loss.
Yeah, for stop loss, but our take profit, we like to keep it empty. We like to keep it empty. I don't know the price also. Is the price the broker giving you 2 decimal point, like 65.27, or they're giving you 65.2777 something?
63.28.
Perfect. That means it's a standard price. Because that one we will confuse people more.
Okay, I should go ahead.
Yeah, sure. You cash out.
On 0.1, right?
No, 0.01. 0.1 give you $1.
Okay, 0.01.
Yeah.
Okay. All right. So take profit is empty, right?
I'll keep it empty because of we monitor the market. But we're expecting to leave the market around. I don't know why my chart is like this. Yeah, we're expecting to leave the market around 300 pips. That's around this $60 per barrel. We expect to leave around 60 or 59.
Okay.
Mm.
Okay. So
I don't know why
sorry.
it's not drop. I don't know why it's not dropping as expected. Maybe there may be some things because it ought to drop faster than this. Maybe other that was not what people were expecting. Guys, do you understand what I mean? It usually drop faster than this. It's supposed to drop
Or
as
is
fast
the
as.
price or is the price low?
No, it's not a price is low.
Oh.
But it's supposed to have dropped faster. That's why I'm checking on this to know if there's any counter information. You know what I mean? Anytime you see it ranging without dropping fast, if you go on the news, you see another reason that oil refused to drop despite this. That's how they will talk about the news. Or they will not say despite who supply inventory, oil price refused to drop because of this and that. And that's okay. This is the reason why they don't drop. But let's see. Sometimes it may happen the whole day to not drop, only for it to wake up the next day. After 2 days, then it to drop. Are you guys do you have any other things you may want to ask me? Are you guys comfortable with the analysis?
Yeah, may I ask?
Yeah, ask.
Hi, so I just wanted to
I wanted to be sure about in terms of analyzing oil. What is the
Let Sam finish because she started first, please.
Okay.
yeah, I just wanted to confirm what are we trading? Are we trading futures or CFD? Because before you mentioned, and then you
No,
mentioned
it depends. It depends on your broker. You're in the UK. Services in the UK are limited to some brokers. Some brokers may offer you CFD or future. It depends on your broker you're using.
Okay.
So if your broker offering you futures, you can use it. This analysis work on both on spot, futures, and CFD.
Okay, and then another just confirmation on which time frame are we trading on, and which time frame are you using for the entry points?
I use mostly daily for analysis, but what gives us profit is the price, not the time frame.
Oh yes, okay.
The price we bought and the price the market is give us profit. But I use mostly daily. Sometimes I use weekly, but most time frame I use is weekly.
Okay.
So if you're in the UK, there are some. I think there are some restrictions on some services. So there could be some good broker that can offer you CFD or futures there. Yeah. Most broker that are maybe members of London Exchange, they can order you or you can offer you futures.
Okay. And then just to clarify, so the entry point is what?
We're entering now. We entered at 63.66. It had dropped some couple of pips now, but even at this price, also within our dropping point.
Okay.
Yeah. But then we are expecting to leave about 300 pips from here.
Okay.
300 pips from here, and the other one, our stop losses are also like. Remember, you must not use my stop loss. I'm just like giving like assumption. So if it's not okay for you, you can adjust it. So okay, I usually put 2.5% to 3% stop loss on my value. So I can put it there, then maybe 300 pips or 250 pips, which means from 63.25 to 65.25, that will be 200 pips. So if you add an additional 50 pips to it, that will be 275 pips. Then it become 20. It become like 2.5. So then if I'm having $10,000 account, which I may most likely use maybe 0.5 or 0. Even if I use maybe 1 point, let me make it easier for me to understand. So if I use 1 point, which is equals to $10, then and I target I target minus 250 point or pips. So I will have minus 2,500. But if I'm making profit, I will have a plus, because I don't put take profit, it can drop to 500. So I can make maybe from here, I can even make up to $5,000 profit. Because if you drop from there to 400, I'll make $4,000, which is most likely. But I'll put it here and I'll put it on Brent and I'll put it on WTI. Then I'll make about $10. $10 times maybe, let's say 400. So I will make, let me put it on pips so that people won't get confused. I will make $4,000 profit on this trade. So you need to treat your trading as an investment. You know what you expect on each of your position. Don't speculate on it. On this note now, then you can lock up and go. And if you happen, you know that you're gonna make $4,000 profit. Yeah. But to make sure within the UK, you use a good broker, because I hear that there's a lot of restrictions
it's too much
with people. Yeah, there's a lot of restriction.
It's crazy, like, yeah.
But it's also good. It could make good brokers to be available. Although some brokers have left because they don't want that condition. Nobody wants to do a business where they are in chain. Oh, okay. I thought I ended the meeting by mistake. Is there any question? We have to leave now. We have spent 1 hour, 12 minutes.
Okay, like in terms of analyzing, I wanted to know which specific information we should be relying on when trading oil, and the source which we should be relying on mostly.
Me, I use demand and supply, and I use price action.
Oh, okay. And the other thing, like the sources where we get the information, should we be relying much on OPEC or any other sources? Which one is more reliable that gives accurate information?
We use OPEC, work with AIA. So OPEC, I don't know, I've not even visited OPEC website before. Did OPEC have a website? I'm not sure. So I use the AIA website. They give all the data of information. Then I use researchers. There are people I paid in Nigeria. I have people who pay to research for us, or like research analysts. They will pay them money for research. They also follow some of the research people, because you know what I mean. So we use these people to make our analysis. They know what is happening. They will do a research for you and come out with a report, with a verifiable report. Then you now analyze it and know how you can invest on it. Then I also use top professionals, like maybe researchers from Goldman Sachs, JP Morgan, BlackRock, and those people too can also hear from what they're saying and use them. But the most important thing we use is demand and supply and price action.
Oh yeah, that's a point I wanted to get, because like a beginner, it can be a bit confusing to have all those sources whereby you don't know where you can concentrate most as you are starting.
Yeah, that's why it's good to have what you can focus on. I focus on demand and supply and price action, and I develop on it. All this researchers now is because of investment aspects. So I don't focus on multiple information to avoid confusion, because those researchers are also human beings. They can be giving you any kind of thing they use. But I've seen that demand and supply influences the market very much with price action. But the price action means buying low and sell high. So there are some areas that have considered a higher price and areas that consider a low price. So when I see those areas, I consider them high price. No matter whatever thing they're telling me, even if there are lesser supply at a higher price, I'm not going to buy it. So even if there's a lesser supply at a higher price, I'm not going to buy it. It may drop, because investors will not like to invest something, buy at a higher price, because they will not make more profit. Remember, people buying oil are people who are buying it for sake of profit, more than people who are buying it for sake of. I don't think people buy oil for pleasure or leisure. Did anyone buy oil for leisure or pleasure? It's always for profit. Always for profit. Both those who are refining it to sell, or those who are trading on derivative to make more money, and those who trade on CFD, it's all for profit. So they won't like to buy it at a higher price because they won't make profit. People that enjoy more in oil and being high are producers. Those that produce it, they enjoy selling at a higher price so that they could make more money. But people who are using it properly will always want it a low price so they can make more money when the price goes up. I think I've answered you satisfactorily.
Yeah, sure. That's understood. Thank you.
Okay, yeah. Any other question?
Yeah, just a question for me, sir.
Okay.
Just if you could clarify on the supply and demand. Do you mean actual supply and demand in the market, or you were referring to supply and demand as a trading strategy? And if you meant, okay, go ahead, sir.
No, go ahead. Finish your question.
Okay, and if you meant actual supply and demand in the market, when you talk about price action, do you mind if you just mention the specific methodology with which you read price action, like what strategy drives your price action market analysis? Thank you.
Okay, I use actual demand and supply from the market.
Okay.
I mean the major market, not because I don't trade only on MT4 or MT5 chart.
Okay.
So I use the major what they're producing inside the oil rig, what they are producing there. That's what I like. The real market, the physical world. I use the actual
That's what you
supply
call
and
the
demand
spot
there.
markets.
Yeah, no matter whatever they call it, they are the one that control whatever we do online. So like now I told you why the price of oil goes up because of the US and China is their trade tension. There's now optimistic, the price went up. If they didn't ease it, the price will never go up, or unless something else will drive it up. So the price cannot go up because of online traders. It's them that drive the price up. Do you understand? Because what to trade online,
yes,
or what to trade digital is the thing they are doing physically. That if trade digital, then we trade it. Yeah.
So that demand and supply, we can call it the fundamental analysis.
Perfect. Yeah.
Okay.
So I use it a lot. Then the price action is also the similar thing. I use price action. I use data analysis to make my price action. That's the course we did on data analysis. It's on our YouTube page, so you can watch it. That how to use the data analysis to arrive at a conclusive report for trading. So I will use data analysis a lot. So we extract previous data and summarize it with current data. Then we can know the average price movement for buyers, average price movement for sellers, and which is most common going to repeat itself. Yeah, then we use it. So from there, when we see the supply data and we check the price, it correlates. It's okay, it's good. I can buy here, so I'll make profit. Okay, even if I'm buying the physical oil, if you give me a higher price, I'll ask myself if I'm gonna make profit. I'll ask how much will I sell this thing now if I'm buying it here. So if I'm not gonna make profit, I'm not gonna buy it. I will look for a cheaper price to buy. Like I told you repeatedly, everybody here that people who trade on exchange, they only buy, they don't sell. So they only make profit when the price rise, unlike we that trade online that can buy and sell. So they will always consider the good price for them to make profit. So I think we have gotten a lot of value. Anybody who is selling, I know some of you are selling. Flimsy may be selling. Mensa, are you selling? So we leave now. We spend 1 hour 20 minutes. We will leave now and see you guys at the end when there's a cash out.
Yeah, sorry. Are we supposed to place just one trade in a day?
Yeah, one trade is okay, especially you. Are you the one I had a class today by 10 o'clock?
Okay.
It's you. You
Okay.
look like your name. Yeah, you look like your name. Yes. Yeah,
it's me.
You one trade is okay for you. So you don't
Okay.
need to trade more.
Okay.
Yeah. We'll be following those people who are mentoring to guide you. Make sure you always share your screen with us on the chat, so we'll be able to see what you are doing and guide you properly. Yeah.
All right. Thank you.
Yeah, if in case, even if you set up your parameter, if it's not in line, or if you want to confirm, you can send it to our chat team. We'll check the parameter you set and know whether they are okay, if they need adjustment or not.
Okay. Thank you.
Okay. Yeah, do have a wonderful working evening, all of you. I'm currently in the office, as you can see.
Thank you.
Office.
Thank you, sir.
Yeah.
Thank you so much. I appreciate it.
Thank you. Yeah. Bye-bye.
Thank